Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a crypto highlight video. And if you're interested in any of the services I provide, please check out the links in the description below for the Patreon and Discord. Okay guys, so I was told to look at Bone ShibaSwap, so Bone USDT. I was told this, so this is part of the whole Shiba Inu ecosystem. I'm not that familiar with it. I am familiar with Shiba Inu, but I do know Bone is something about like you get like voting shares or voting rights or something on their platform. But again, if you know more about Bone, please leave a comment about it, because I love to learn new things. So if you know a lot about Bone, inform me and anyone else who may not know. But I'm going to be looking at the technicals. That's why we're going to be doing this highlight video. So starting off with the monthly, I'm not really seeing much here. Not that much time has passed. I'm looking at the MEXC exchange. Now I looked through a couple of different charts through different exchanges. This is one of the ones that had the most data, so I'm going to use this one. But the monthly, it's really too young for me to actually take a look at and give any real analysis on it. So we're going to drop down to the weekly, see if there's anything else that I see. So weekly is pretty young as well, but we can mention this at least. So opened up down here, we had a nice little consolidation here, then a breakdown, swept under the low of the open, and then since then has bursted higher and had a very impressive rise up to $2 and change, and now we're breaking back under $1 from that rise. And what's interesting is where we're bouncing off of. So the zone where we're bouncing off of is really this consolidation zone, right? So you have this, the low of the consolidation right here, and let's go down to the black line here, that way we know it's off the weekly time frame. And then we have the highs of the consolidation. So you can use the high wicks here, and we'll do that. We'll actually mark that here, and we're going to mark right here as well, because it's grabbing a lot more information. You're getting the wicks all in the past, so back here you're getting these wicks back here, and then you're also getting the wicks in front of here as well, right? So we kind of have, what do you see here? It seems more like a channel, right? So we have a bit of a channel structure here. We have the low end of the channel that was taken out from the original consolidation before we bursted up higher, and then we have the high end that was taken out before the drop back into it, right? And since we've dropped back into it, what have we done? We've respected the median line, which happens to be this high wick here from the high of this consolidation, or near the high, and then we've broken back down, came back up, and so far on the weekly we're respecting that as resistance, and we may actually see a further breakdown lower towards these lows. But on the weekly, I'm not really getting that much information. Okay, there's not that much here. Now we did lose this parabolic trend line, so let me show you what I'm seeing. So from this low down here on the weekly to this, okay, we did lose this trend line currently. All right, now I have a bit of a different definition when it comes to breakouts and breakdowns. Okay, so I'm going to tell you that right now. So this trend line here is not a trend line that is likely to hold, and for a long term. Okay, to me, it's a measurement of something that's more parabolic, which makes sense for something that opened up like this. So price losing this trend line is not that big of a deal. However, let me use this to explain my breakdown strategy, or at least my theory on it. So when price loses a level or breaks through a level on the daily time frame at the least, I need price to close above or below the high and low of that candle. So essentially, if you're breaking out, let's say breaking out from 125, so let's say you have a daily candle that started here at $1.20 and then closed right here, I now need the next daily candle to have a daily closure above the high of that candle. So above the high of that wick, above the high of the body, the whole candle. I need a daily closure above that level. And what that will tell me is this level here is validated to have been broken. Okay. The reason why I do that is because oftentimes you'll find that you'll have a breakout candle do what? Retrace back down, and it's a way that market makers and smart money individuals will trap breakout traders. Okay, so the way I do it doesn't always shield you from that, but it does start to filter out false breakouts quite a bit. And it's the same thing for the downside. So I break down, if the candle starts, let's say at 60 cents, breaks down, closes right here, I need the next daily candle to close under that level right here. Okay, simple enough. Hopefully that makes sense. So now getting back to the chart here, what we've seen is we're seeing price lost this level, never closed under this weekly level. So never closed under the weekly candle that closed under this ascending trend line that was generated from this consolidation here. Okay, so we never actually had an official breakdown. So what we're having so far is a retest of this structure, which has confluence with the median horizontal resistance line here. So there's all confluence here of resistance. Now, if price can break back above this and hold, you're looking for a serious continuation. When I mean serious continuation to break above the highs here, a serious continuation. All right, so you're seeing something massive here. But what's most likely is that you're going to have trading here for the next week or so, maybe half a week or a week and a half. Okay, so you may get one more candle here, half a candle here, and then you're going to have a breakdown further to take out the lows of this candle here and potentially come visit the low end of this range we've built. Okay, so the low end of this consolidation zone, which is around 52 cents to around 45 cents. Okay, so you have to take into account this low wick as well. So we'll pop that on the chart as well. So we have kind of like a low range here. Okay, so we're going to be looking for something like that to be potentially visited at some point. So we'll actually make this a little blue zone right here, just so it's a little clearer that the low end is here is a zone. Okay, so that's what we're going to be looking for if we should break down here. Now, if we do break out back to the upside, I'm going to tell you, watch out for a rejection here at $1, pretty much straight up $1, and then back towards $1.25. You may get a bigger rejection as well. If you can hold this ascending trend line even after rejecting these levels, that's actually implicating a really nice bullish move is likely coming to the upside. Okay. All right, but the probabilities are to the downside right now. Okay, they're to the downside, but I am liking what I'm seeing as of right now. This does not look that bad. This looks pretty good. Again, not confirmed to break down from this trend line, and this is exactly why I have that rule. Now let's go down to the daily, and we'll see if we see anything else on the daily. If there's any more information that I haven't been able to see on the weekly here. So daily is interesting. Daily looks pretty interesting as well. Daily actually is looking quite bullish. Okay, so what I'm seeing on the daily is this here. So let's actually get this ray line back. Okay, we're going from the high, this swing high here. We're going to connect these wicks right over here, and this swing high, this swing high, I should say. So these two wicks. So this high wick right here that I'm at, and then this high wick right here. And look at this. So we're actually having, we'll make this a blue line. Now we're not going to keep this line on the chart. I'm just going to use this as a visual example. We're having a nice potential breakout move on the daily. Okay, so what this tells me about the weekly is the weekly may not be confirming this breakdown at all. So we may actually get a nice daily move up after almost what looks like a kind of a disjointed cup and handle structure here. Okay, so let me show you what I'm seeing here. So this structure here, so I wouldn't say it's fully a cup and handle because obviously it didn't make it all the way back up towards what would be somewhat the neckline, but you did have a bullish consolidation here. All right, so you break down, you start a nice consolidation here, a nice rise up, and then as price fails off of this resistance, what do we start seeing? We start seeing price slowly grind lower. Okay, sorry, I didn't draw that really that great. Let me try that again. Okay, so you have price slowly grind lower, and I tell this to a lot of my students in my tutoring course that what you'll find in bullish structures is that price tends to grind lower like this. Okay, at a certain degree, you're looking for, well, I'm not gonna say a degree because I teach them that, but at a certain degree, there's a optimal degree of angle that you're looking for, and it heightens the probabilities of this structure actually playing out bullish. This is a pretty good one, and they tend to veer down because smart money is looking to buy at a better price. Okay, smart money is looking to let price come lower and buy at the best price possible because the probabilities on their side that price will break out from that bullish structure. And the same thing happens with bearish structures, right? I've said this multiple times. You have a slow grind up, all right, and that tends to be a bearish structure. And again, it's the same thing. The angles do matter for these structures. So if this validates, you're looking at a nice little flag structure, and I bet you the one-to-one move is going to, or I should say the measured move is going to bring you back towards the highs of this general range area. So back towards $1 plus, towards $1.20, grabbing liquidity above this level here and trading into the resistance at $1.25, $1.26. So I actually think you are going to see a break up now on the weekly, but I am not overly bullish on the weekly either. All right, I have to be more neutral until this zone here, so the highs get taken out or the low zone here gets taken out. So we're now starting to trade into a potential consolidation here on the larger time frames, but on the daily, this is a great range to potentially trade if that's what you're looking for. Okay, but as of now, the weekly has not lost this ascending trend line. The daily is showing signs that it's retaking it. If this can have follow through, it is fighting at resistance. It did take out this swing high here, this very, very small high pivot here. But if it can actually get the follow through, and it would have to be today's candle or the day after, so tomorrow's candle, it has to break through essentially now. If it does, if it starts failing here, you're going to be looking at like a double top structure right here, and that will definitely lead you down towards the lows down here. And look, you even have, I believe I see you have a small fair value gap, a bullish fair value gap down here as well that has confluence with this low zone right here. So take a look at this, very, very small bullish fair value gap right here, very, very small. Okay, so it's right above the low zone of this range that we're looking at. So again, just more confidence that you're likely going to see price come down here if we start failing off of here on the daily. If we have a closure under 84 cents, it's extremely likely you're going to see a breakdown further. Okay, so I have to have short-term bias to the downside. But I am more neutral on the larger structure until one side of this larger range breaks. Okay, so this is very interesting. This is a big decision time, because if this does break through and comes back to try and test the highs of this, the probabilities are very high it starts to break out. Okay, really high, and you can clearly see we're still holding an uptrend structure as well, right? So you see the lows that was made here, and you see them being held. So we did take out these lows, and we did take out these lows, or slightly took those out. Yeah, we did. We wicked under them. Okay, so the higher lows did break from this drop down here. Okay, but overall you are still higher low from here. So as long as you hold this bottom end of the range, these lows are likely to be protected for the foreseeable future. Okay, so hopefully I answered a couple questions, showed you a few things. Really watch for 92 cents to 93 cents to be broken. If that can get confirmed and validated through, then you're probably going to see price getting towards at least $1.04, and then all the way up towards nearly $1.20-ish. Okay, that is it. I'm not seeing anything else. I think it's all the information we really need as of right now. So guys, I hope you enjoyed the video. I hope you enjoyed the content. If you did, give me a like, a subscribe, maybe a share, and definitely leave a comment on whether you agreed or disagreed. And if you do know more about this coin or you disagree, please leave your opinion down in the comment section. I love to learn new things. I'm not afraid of critical advice at all. I love it. And if you enjoyed the content, tell me why and tell me how I can make it better, because I do want to make it better. All right, guys, that is it. And remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.